Now, the crushing weight of a rising inflation remains high on the workers' agenda. Cosatu has renewed calls for the review of the inflation targeting policy framework. Annual headline inflation is at 5.4% in June from 6.3%, of course, in May. Now, high interest rates raise the cost of living for everyone who is repaying a loan. And Cosatu's Matthew Parks joins us now for a conversation on this. Thank you so much, Matthew, for joining us this afternoon. Now, of course, yesterday, that all-important announcement from the South African Reserve Bank saying that, the interest rate will be unchanged at 8.25%, keeping the prime lending rate then there at 11.75%. Of course, a very important message yesterday and something that you, of course, will be welcoming, seeing that inflation is also down now for, under 6% in how many months. So it is definitely good news in some way.
Hi, thanks. Yes, thanks for having us. No, we welcome it. Workers, the economy, SMEs, businesses are really struggling. Another repo rate hike could have been another death knell to the economy, something that we simply can't afford. So we do welcome it. It's going to give some additional relief to workers who are struggling to take care of their families, to survive on their salaries. We also welcome the announcement the day before that the inflation rate has fallen by from 6.3% in May to 5.4% in June. That's going to give additional relief to workers. And I think for us that those are critical interventions. We do hope the Reserve Bank will take a more cautious approach from now to be a little bit less excessive when it comes to managing the repo rate. We agree we need to manage the inflation rate because when inflation increases, when it gets out of control, the first persons it hits the most and the hardest is working class families who earn the least. But we think the Reserve Bank at times, and we understand the need to manage inflation, obviously, but I think the Reserve Bank at times has gone a little bit too far at times. At times when they could have simply done a 25 basis point hike, they've gone for 50 or 75 points. At times when inflation was actually a little bit stable or decreasing a bit, they've still sought the need to increase it. We think that really is suffocating the economy. Over the last 18 months, we've seen the repo rate being hiked by about 475 basis points. And the cause of our inflationary crisis are not domestic, they are foreign. They're from the war in Ukraine, the international oil price volatility, etc. So there's not much that consumers can do about it. And the point we have raised to the Reserve Bank when we have met with them is that how far do you go in terms of increasing the repo rate all the time? We're going to end up cutting off the patient's oxygen supply whilst we're still trying to resuscitate the patient. We need to find the right balance. Yes, you must manage inflation, we agree, but let's also not kill the economy and make it impossible for workers to survive at the same time. Let's find a balanced approach, but we shouldn't be extremist in either approach.
Matthew, of course, it is very important that you mentioned there, the high interest rates. Of course, it is naturally having a very dire effect on the working class, as one knows. But you also mentioned that you want government to step in here in some way. What exactly is it that you would like government to do here?
Yeah, so we appreciate the Reserve Bank has basically got one trick in the tool shed, which is managing the repo rate. There's not much else they can do besides that. So we appreciate theirs is a largely reactive intervention stance. I think for us, what do you think government can do? Because there's not much we can do about the war in Ukraine and the oil price, obviously. But what government can do is to say, from the fuel price regime, Treasury can reduce the fuel tax on it. Currently, about 28% of the fuel price goes towards taxes, so government can reduce that to give immediate relief to commuters, to workers, to the economy, which is what they did last year, and they did a little bit of it in the beginning of this year in the budget speech. We think there's space on that front. We also think that the Department of Transport really needs to be woken up. They need to put the Road Accident Fund under administration because it is anarchy at its best. It is chaos on a daily basis. But the RAF becomes relevant because a significant part of the fuel price goes towards the Road Accident Fund, to the fuel levy. And they have accumulated liabilities of about 400 billion rand. So if we can sort the RAF, if we can get the RAF bill and the RAPS bills to Parliament, that can help set the Road Accident Fund on a sustainable trajectory to ease the pressure on some part on the fuel price. We also need to see much more being done by government to help secure transit rail and, of course, metro rail as well, because those are key to getting our food or other commodities onto trains, help protect them from transport inflation or fuel inflation. Equally, metro rail is critical to help protecting workers from the rising fuel costs and transport costs in our cities. Those ways of insulating and protecting poor communities, protecting the economy and so forth, managing food inflation. We do welcome the 254 billion rand relief given to Eskom in terms of the debt relief package this year. We hope that's going to help Eskom be less dependent upon these double-digit tariff hikes they've been fleecing the country with for the last 17 years. Of course, Treasury also needs to help Eskom, as do the law enforcement organs too, to help reduce its operating costs, to deal with the issue of corruption, wasteful expenditure, the looting, the criminality, which has really crippled Eskom. Because right now we're basically subsidizing Eskom's corrupt operating costs, the cable theft, etc. We need to help Eskom as well. We also do think it's quite shameful and honestly scandalous that government has found money to give politicians an increase this year of about 3%. But since the SOD grant came into effect in 2020, which gives relief to about 8 million of the most poor parts of our society, they haven't once adjusted it for inflation. So when we see the rising cost of living, inflation getting out of control, the very least we could have done is to increase the social grants, especially the SOD grant, to protect them from inflation. It is quite shameful that we have found money for politicians who already earn a very luxury salary, yet for the people who are earning 350 rand a month, we couldn't spare a single inflationary adjusted increase. So I think for us, it's about adjusting many issues and doing many kind of difficulties at once. But we do hope that the Minister for Finance will come in October to Parliament with the medium-term budget statement and say, at least we're going to adjust the SRD grant for inflation, if not ideally to increase it to the food poverty line.
I want to come back to the fuel price that you mentioned. You are proposing that government basically needs to reduce the fuel price in some way. But is this not going to cause another budget deficit in some way? Maybe you can explain that.
Look, we have to deal with many crises. Unfortunately, we don't have a luxury of choosing which crisis to tackle simultaneously in the country. Often because this is we have neglected them for a past decade plus, we've failed to deal with it. So the road accident fund is a mess. Claimants don't receive their monies. The lawyers are fleecing it like some sort of slush fund. It has liabilities of about 400 billion rand, so it has to be fixed. We can't simply outsource its failure and its corruption, its mismanagement to society at large, because society can't afford these 25 rand litre fuel price that are really suffocating the economy, making it very difficult for workers and to get to work, for businesses to operate and to create jobs and to pay workers. Right now you have a fuel price regime which competes with the national minimum wage hourly rate. So we have to address it. So we have to fix the RAF. That's going to ease the pressure on the fuel price. Yes, there would be some effect to the fuel the revenue, sure. But again, we have to balance it. We can't simply say we're going to increase taxes, etc. In the meantime, we make working class families suffer even more. Of course, if you ask where will we get the additional funds when we plug different holes, where we reduce expenditure, etc., or reduce revenue, the easiest way to do it actually is quite simple. We have a very efficient team now in charge of the South African Revenue Service. The commissioner, the SARS employees are doing a fantastic job. But government gave them additional resources in the past financial year to hire an additional 500 staff, to invest in IT capacity, to go after tax dodgers and customs evasions, etc. And that simple injection to SARS yielded an additional 94 billion rand in tax revenue collections. It managed to increase tax compliance from 61 to 64% in the past financial year. So if we give additional resources to SARS, save 10 billion rand, we are quite confident they could collect an additional 100 billion rand for the fiscus, not new taxes, but simply by making sure that everybody pays the taxes that are currently owed to the state. So that's a simple way, but we can't continue to have this approach where we suffocate the poor, we strangle the economy because we want to subsidize mismanagement, corruption, maladministration, etc. We have to fix the leaking ships in the state, as well as to give breathing space to workers and to the economy at large.
And then you also said you want a government to accelerate basically or have a plan to rebuild the transit and process railway lines to move goods and commuters off the roads basically onto rail. But then the question obviously is there, how feasible is this and how long will it take to achieve this?
It is feasible. I mean, all of our state-owned enterprises were world-class institutions a decade ago, including transit, including metro rail. The infrastructure is there, but it needs to be fixed, it needs to be rebuilt. We have seen some tentative progress, for example, on the lines from Cosatu and Sishen in the Northern Cape to Nelson Mandela Bay to Saldanha Bay. That's given significant relief. We've seen some progress on the Richards Bay line in terms of the security collaboration between the police service and the private security and transit. So we need to see more of that. It needs to be done faster. The crisis that transit is costing the economy about R1 billion every single day in lost revenue to the mining, the agriculture, manufacturing sectors, but also to the state as well. Because if those sectors can make those profits of R1 billion a day, there's an additional revenue coming through company tax, VAT, etc., salary tax, etc., to the state. So the money can be found. It needs to be found. But if we continue to neglect these state-owned enterprises, you'll find that South African ports, whether it's Richards Bay or Durban or Cape Town, etc., will be displaced by neighboring ports in Mozambique and Namibia and so forth. So we have to do it. It can be done. We don't have the luxury of simply sitting on our hands. We also don't have the luxury of government taking forever and a day to fix these crises. It was quite shameful that during COVID, during 2020, when the Department of Transport and Metro Rail assured us at NEDLAC that there is security put in place to protect PRASA, Metro Rail's lines, that in fact that wasn't done so. They had cancelled security contracts. And what we saw in Cape Town, for example, on a critical train station at Langa, was that an informal settlement was built right under PRASA's noses across the train tracks. And that's had a huge debilitating effect to the train lines across the Cape Flats, from the northern suburbs to Khayelitsha and Mitchells Plain, just for an example. So these are not easy things, but they have to be done if we're serious about rebuilding the economy.
Thank you so much, Matthew Parks, of course, from Cosatu, just giving us, his opinion there. Yes, he says that they welcomed the repo rates announcement yesterday, but the Reserve Bank's announcement yesterday about the repo rates, and of course inflation for the first time in a while now under that 6%, but still a lot needs to be done in order to basically save the working class from economic, or to have them in an economic space where they can be living their lives as they should.